there's 16 presenters today, which means you're going to be subjected to 200 to 300 slides. If you can go away and remember one slide, you can wake up Monday morning and think about the one slide you saw today. I'm hoping it's this one. So we are a Canadian-based, dividend-paying mining development company that holds royalty interest in two really good properties, a coal property and an aggregate property. Both of them are in Nova Scotia. And so the coal property is in production. The aggregate property is expected to commence production around 2020 or 2021. And we are ruthless at managing this company. We keep our costs low. We're not out to explore around the world. We don't get on jets. We don't do anything like that. This is about shareholder return for our investors, and that's what we do. And hopefully the following slides will prove that to you. So what are the key value drivers? We have a dividend policy. We started out by paying a half a penny dividend last year. We're paying a penny dividend this year on a quarterly basis, so quarter of a penny per quarter. Royalty revenues, not spending money. We're just collecting money that others on benefit that money other people have spent. We have $3.6 million in the bank, which is unusual for a company of our size, and frankly unusual for the 15 other companies that are going to present here today. So our royalty assets are top tier. It's a world-class mine. It's a world-class aggregate deposit. People think of aggregates as gravel pits. This is a $100 million gravel pit that's going to be put into production. We have an active generation program looking for new royalties. We're not going after gold and silver. That's a crowded space. We're going after all those other minerals that people don't look for. And we're buying back stock. So that's a real vote that we think our shares are undervalued. I'm not telling you they're undervalued. We're actually buying them back because they are undervalued. Here's a snapshot of our company, 30 million in market cap. We're in good old safe, high unemployment Nova Scotia where we can keep a workforce and we can keep them at relatively good costs. Our top shareholders are shown there, mostly retail. But here's what management does. In the last year, we've gone from 8.5% to 12%. I bought 1 million shares personally. I went up 2% last year. That is what $1.5 million worth of coal looks like sitting on the ground. This is our mine. It's the Donkin mine, which is located in the northeastern part of Cape Breton, near a little town called Donkin. Producing in 2017, our royalty is 2% of the first 2 million tons a year and 4% of everything thereafter. The mine is permitted to do about 3 million tons a year, so we're going to bust through the 2% and get into the gravy of the 4% when the mine comes to full production. Here's some of the equipment that's gone in. There's $150 million of capital spent there so far, and they're planning on spending more to keep the mine developing and building up. So where are we? I'm missing the screen down here, so apologies. I have to look quite a distance, but we're producing, we've got 4 continuous miners working away at the mine. They're building production up. We're sort of in the less than 1 million tons a year kind of category now. And they're advancing their mining methodology as they go into the deposit. They're learning about the deposit. They're finding ways to optimize the deposit. Notwithstanding it's permitted for 3 million tons a year, that's not the way these people think. They're thinking like most miners do, which is how do I get the most production out of this? The reserve life is well, it's not infinite, but it's pretty close. It's probably 25, 30 years. This is not a short-term mine. This is a long-term project in this community. There's another shot of it there. What I'd like you to take away from the map is all the blue. It's called the ocean, and it means that we can put our coal on a boat and send it just about anywhere. We're about a par 5 from the mine mouth to where you would put a pier and ship coal around the globe, and you can ship it on the world's largest ships, which means the world's cheapest shipping. We have records from the prior mining in that community from the 90s, and coal from Cape Breton went to just about every country in the world. So this is an easy kickoff point. Our coal is similar to that's produced in Illinois and Pennsylvania, and the difference between our coal and their coal is a little bit of a quality difference. Some are better, some are worse. But the more important difference is our coal doesn't take a $25 train ride to get to a boat. Here's our royalty income as it's growing. These are thousands of dollars. I like the next slide better. These are millions of dollars. And so when that mine comes into full production and we get a decent coal price, which we're living in right now, we get about $10 million of royalty. This company has a market cap of $30 million today. We're a little bit more than just coal. This is a wonderful piece of granite. Those folks are standing on 400 million tons of grade A granite. And this is a Black Point project. Look again at the blue. We're right beside water. We're not a par 5 from water. We're a putt from water with this particular project. It's operated by Vulcan Materials Company, America's largest aggregates business. And they're planning on spending $100 million to put this into production. And again, this gravel will go down to the Mid-Atlantic and then also around Florida, somewhat into the Gulf of Mexico. and it's all because the logistics are so simple here to do this. We have a royalty off of that. We spent $1.8 million. We've recovered $1.4 million in milestone payments. We got $400,000 more to go, and then they build that, and we're going to start collecting royalties without spending another penny. So we put our money in, we've got our money back, and then we're going to collect probably 50 years of royalties out of this property. I mentioned that we have ongoing project generation. We are not looking for gold or silver. We're looking for all those other parts of the periodic table. And we've got a very interesting strategy on doing that, because we're going to find royalties that people aren't putting up for sale or being auctioned off to like Franco-Nevada or Sandstorm or other companies like that. We're not in that space. We're going to go find things that people aren't thinking about selling and try and get them to sell it to us for what we think is a good price. And we're looking for cash flowing royalties. Although we would take some longer term things, we're looking for cash flow because we pay dividends and we want to pay more dividends. Here's our normal course issuer bid. As again I said, we're not going to tell your stock's undervalued. We're going to act like our stock is undervalued. And there's our purchases over time. We bought about 5-6% of the company back, and we bought it at around 30 cents a share on average. It's trading at 50 cents today. Normally trades at 60. We're down a little bit recently. Here's the simple arithmetic to this company. Take the coal price, multiply it by the production, multiply it by 2 or 4%, and take a little bit of G&A off, and we're going to pay a dividend. Simple as that. People say that coal is sort of dead, it's dying, we're not using coal anymore. Our coal is very suitable for metallurgical coal, which means if you don't have coal, you can't make steel. So we don't think the demand for our coal is going away. On the thermal coal side, if you look at the longer term trace, China and India and the Far East countries have gone from being a small fraction of world consumption to being the majority of world consumption. So if somebody turns off a coal plant in Alberta or BC in Ontario, we don't care. Our coal is getting on a boat and it's going to places that want coal, and the places that want coal want a lot of the coal. They want the majority of the world's coal, so we're not concerned about that. Here is the pricing dynamic for coal over a few years, and if you take a look at the right side of the chart, it's going up. The blue portion is metallurgical coal. The beige or golden, sort of a dull golden portion is thermal coal. So we like the trend on that. I won't speak to this chart. It's got a lot of numbers on it. It's on our website. It's on the books you're going to see. Here's the one I want to speak of. On our website, we put in a dividend calculator. So you can take a look at our company, figure out what you think our coal production is going to be, think about what coal prices are going to be, move those toggles around, and we'll predict what the dividend is going to be. We're serious about paying out money. Valuation, we can be re-rated to other royalty companies. As our dividend builds, people are going to pay more and more attention to us, so we see a re-rating there. And we think that there's an interesting aspect to our company that we don't have an accounting value for our asset. We have working capital and equity. So our income from the royalty is going to lead to very high ROEs in perhaps the 100% area. So again, we're unique amongst mining companies. Most of them never report earnings or report de minimis earnings. We're going to have ROEs like 10, 20, 50, 100% for this company. So outlook, we think the production's going to continue to ramp. Dawson and I, the president of the company, Dawson and I visited the facility in June, and it's just a beehive of activity trying to increase production. Quarterly dividends will materially lift. As we get more royalty, you'll get more quarterly dividend from the company. We'll continue to buy back stock. We were delighted to separate non-believers from holding shares of Morien. We'll just buy them back. We're happy to do that. We're actually quite active now because the share price has gone down a bit. Vulcan intends to develop this Black Point project. We're sitting there watching, waiting for the checks to come in on that one. We think the valuation multiple expansion is a real potential for the company. So we think with the royalty income and our stock valuation, we have an attractive method to go and buy other royalties. We could go to individuals who own royalties and say, we can buy your royalty for shares, you can continue to get some income through our dividend, and we can capture more royalties through and build a portfolio that way, but we're not dying to get more royalties. We'll get them at our terms and build out a very safe portfolio. And then lastly, this is a long life project. The coal mine's 25 years and the granite quarry is about 50 years. So we're not going away soon. And that concludes my comments. Thank you very much.